Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi and Ajay Sharma. Of course, we are watching out for the markets and the kind of momentum that we were having throughout the trading session. It's off that, but of course, the biggest talking point, apart from the next 1 hour, is going to be India versus Australia, which is lined up this Sunday. And I'm guessing for the next 2 to 3 days, that's the only thing anyone is going to talk about in this country. Having said that, yes, we have another hour of market to deal with, if I can say that. It's been an okay week for us, not too bad actually. It was truncated, but nonetheless, we have managed to gain almost 1.7, 1.8%, and that will mean that we are having the best week in almost 2 months. So since that entire festivity period has been over, we have managed to inch on further gains, and this is despite the bad news coming in from the banking sector, if at all you want to call it that. Banking sector, of course, is reacting a bit negatively. So the PSU banking index is your top sectoral loser, down about 2.5%. Midcaps and small caps have also had a stellar week. They have been hovering at record high levels. Pharma, Auto, FMCG, they have managed to gain a bit. So the crude oil prices coming down has provided fillip to the likes of paint companies and Indigo Paints and Asian Paints. These stocks are reacting. And then, of course, there's a movement coming in 10-year as well. It's coming to the lowest level since September 29. So a bit of movement as far as money market is concerned as well, Aisha, but I think we're just going to talk about markets compulsorily for the next 1 hour. The heart and the mind is talking about cricket already.
Yeah, we're all stuck on Sunday, aren't we? You already get up, already bleeding blue. But yeah, for the markets, I mean, SBI Life, Apollo Hospitals, HDI Life, some of these life insurance plays are the ones which are seeing a big move today. And it's pretty much an across the sector move that you're seeing. Of course, there are a lot of dots of green within the broader end of the market. That's where, once again, you are seeing bigger moves. So IRCTC, for instance, has jumped up about a 5% today. We were talking about TVS Motors, European foray, that stock holding strong by 4%. There's ICICI GI as well, 4% of a move there. HDFC AMC is going very strong with another 3.5% move. But the weekend of the market has only gotten weaker. So look at what's happening with SBI. After a downtick of 2% from where it started off the day with, it's only worsened from there. 3.5% lower is where SBI is currently. Axis Bank as well, down about 3%. And Bajaj Finance is somewhat, stayed put at that 2%, 2.5% kind of dip mark. Similar can be said about an ICICI Bank as well. So, yeah, it's the big boys once again which continue to underperform, and I have to add Reliance there. It's standing absolutely flat. That's where Reliance Industries is in trade right now.
In fact, the bank stocks revisiting the lows or making new lows is actually something to watch out for. And that in the face of bond yield, which just dropped 4% right now. So on the one hand, crude is lower, which is helping bond yields go lower. And plus there is some additional money market activity which is helping bonds lower. But still, the PSU pack, some of the large banks, there is no recovery being attempted. In fact, I would say Bajaj Finance could have been down 4-5%, but that's from the pack compared to others is braving it out, just 2%. SBI, you see L&T Housing Finance, RBL Bank, all of them 5 to 7% cuts, no recovery in sight. But apart from that, autos are the one which is shining. Not only TVS, but look at Bajaj, Hero, all of them. Some of the pharma stocks have come back. Cipla, Divi's is doing very well in trade. So not a boring market, but yes, headline indices may mask the action. Andrew Holland is here with us, along with Kunal and Nuresh. Andrew, before we come to markets, what are you watching out for the match? Australia versus India, with it the bowling, the batting, or this time even fielding will be very important. So what's something which you are very looking forward to?
I suppose, if we've seen the last few matches, it's been, an exciting kind of finish. And I think, I'd like it to be a kind of a tight game, so it becomes more exciting rather than, it's just a one-sided event. So, but I think the batting is obviously going to be the key, and we'll all be rooting obviously for India in the final. So I just hope it's not too one-sided for India, and it's a good game.
The way financials are taking it, let's come back to markets. So would you be a buyer of some of these stocks which have been taking it on the chin today, L&T, RBL, some other PSU banks as well?
It's been interesting. We've kind of been scratching our heads, right, over the past few months about the whole financial sector, and particularly the banks. stellar results. Yes, not great commentary about NIMs, but there was something that was just holding the sector back. And maybe now with what the RBI has done, we know what, the concerns were. And I think to my mind, I think it's kind of fairly well priced in, given the underperformance. So I think once we're through this, and I think, throughout the day, I'm sure you've identified the winners and mainly the losers from this move. But thereafter, I think, if the narrative changes more towards, which it is doing, towards lower interest rates, commodity prices helping, then I think we'll see the banks recover and be one of the leading sectors going forward towards the back end of the year, actually.
On that subject, let's hear out Dinesh Kumar Khara. He just had an interaction with Ajay. Of course, about the RBI norms, B, about the fundraising, etc., and how SBI card gets impacted because of this norm. Let's hear out his views.
I would say that perhaps it's a step in the right direction, considering the fact that there was a lot of concerns which were expressed by Honorable Governor relating to the kind of unsecured credit which was growing, and also the players who were extending that credit. So that is one of the reasons why perhaps this kind of measure was very much required. And I think we in the financial system, we were expecting something on the similar lines to really happen. So I would say that it is not merely the unsecured credit being extended by the banks and NBFCs, but also the NBFCs which borrow from the banking system. There is a recalibration of the risk weights, which has been directed by the Reserve Bank of India. So, which very clearly means that the capital allocation for supporting this kind of a asset class would actually go up. So, if I take the example of State Bank of India, we have done some back of envelope calculation, and we expect that our capital requirement will perhaps go up by about 55 to 60 basis point. Point is that the major demand drivers are essentially those which are like home loans, education loan, gold loan. So these are the entities, and even MFIs also. So these are the entities which have been kept out of it. So I expect that these are the major entities which are into asset creation, and also it is also a chunky demand for these kind of loans. So I think to that extent, there would be some impact, but not as significant, which should be a cause of worry. I would say that in many respects, it will probably avoid any kind of a liberal spending, which perhaps people would have taken, where people could have challenged in terms of repayment. So I would say that it will ensure the healthier growth of the demand and also of the economy too. Even if we reckon the impact of this higher risk weight rates, I expect that it will consume about little more than 400 basis points for the kind of book which they are having. So it would still be about 17% plus in terms of the capital adequacy ratio, which will be much more than what the regulatory prescription is. So there also we are quite open in terms of raising the resources through tier 1 or tier 2. So the board will be taking appropriate calls, and we don't envisage any kind of a challenge for the SBI card. And as far as the quality of the book is concerned, adequate steps have been taken by the company to address the quality related concerns and to ensure that the book stays insulated from any shocks as far as the credit quality is concerned.
Okay, some other big movers in the trade include names like Nykaa, which is suddenly up 9%. You also have Narayana Healthcare, which is up 6-7%. You also have names like Titagarh Wagons, which is now up around 12%. But the other pocket, which is actually doing quite well, is the entire insurance space. Take a look at SBI Life, higher by 4%. ICICI is also up by around 4%. You also have names coming in from ICICI Pru Life also, which is higher. So all of these insurance plays, whether general or life, are all seeing a bit of a bounce. Kunal, comment on the charts of some of these insurance companies. Should one buy the momentum here?
It's a start of a momentum, but it's a start of a breakout for many of these names, Anisha. So I think, for example, SBI Life, we were discussing in the morning on Chartbusters that how the stock has come out of almost like a 3-4 months of consolidation. It's not been a very mild kind of a consolidation for these stocks. The range for SBI Life, for example, has been quite steep. The stock had formed, I think, a 80 point to 100 point range in this last few months of consolidation, and that's why you've seen the breakout being more powerful over there. HDFC Life also, I think, has confirmed the 50 DMA breakout today, breaking past about that 640 mark. So I believe that's also another stock to look out for. ICICI Pru is something very interesting because that stock is now completing or on the verge of completing a bullish flag formation on the daily charts. So is the case with ICICI Lombard. In fact, even the PSU names and the stocks like GICRE, National New India Assurance, I think these are the ones which are also looking very attractive on the charts. Many of these stocks have confirmed a swing breakout for themselves. So when we see such kind of a strong cohesive move across many stocks within the same sector, and that too especially at a time when many of the stocks are coming out of their major consolidations, we term that as a breakout and possibly a strong sector trend which could be in the making over the near term.
Naresh, wanted to get you in on some of the beaten now names. I mean, look at SBI. Ajay was just highlighting as to how it's retesting the morning lows. In fact, that can be said about the entire private banking pack, or rather large cap banking pack, Axis, ICICI Bank, and I would throw in a Bajaj Finance amidst the NBFCs as well over here. Tell me what you read. Do you think there's going to be any recovery anytime soon, especially on the charts of an SBI, Axis and Bajaj Finance?
So if you look at price action, anyways, the recovery was relatively feeble compared to the rest of the market, whether it is the broader market or the Nifty. And after today's announcement, a gap down with decent volumes makes it difficult for a recovery. So we could get into a sideways zone for a lot of these names. If you look at State Bank of India, it has always struggled to cross that 580 to 600 mark over the last 6 months. On the downside, 550 is a support. So one can be looking at a buy on dips closer to 550, not as of now. Same way, if we go to Bajaj Finance, the stock has struggled around that 7,800 to 8,000 mark. Closer to 6,800, 7,000 is a support. So that is a point where you want to look out for a trade, for a bounce back. ICICI Bank has been the weakest of the lot in terms of from being an outperformer to something which has gone sideways, and now today's downtick. But again, there is a lot of support at 880, 900. So as of now, one would be better off waiting for some more downticks to start participating, not on the first dip as such. And overall, there is a good possibility we go sideways. So one has to be playing for a bounce, then the risk reward has to be better. So maybe another 2-3% lower is one could start looking at these names.
Right, okay. That's the take coming in on the entire financial pack. Let's also, focus in on what's actually holding out. Besides, of course, the insurance plays, some of the auto names are chugging along very nicely all through this week. In fact, we should bring up the Nifty Auto Index this week chart alone, because that's one sector along with IT which has really staged a decent comeback. That, of course, is the today's move. But if we bring out the weekly chart, there you go. A 4% move is what you've seen on the Nifty Auto Index. Today too, there's a Hero MotoCorp, there's of course TVS Motors. They're all holding out very nicely along with a Bajaj Auto too. Andrew, where within autos are you comfortable adding fresh positions?
So I think there's been across the board actually in terms of you can whether it's on the two-wheeler side, there's been a lot of reports or negativity around Aisha in terms of the competition, and that hasn't played out, and we've seen a good run in that stock. We've seen some news from TVS recently, which is again positive. So I think it's more stock specific rather than the whole sector. But of course, you're getting all the other kind of companies being benefited from some of the positivity around the sector. But I'd also say that when you're trying to find sectors within the Nifty, and I'm talking about that in particular, if your banking sector's under pressure, then you have to put money somewhere. So at least with the auto sector, that the festival season's been good, and the outlook remains, itself, quite kind of robust, and therefore you have to look at which of those either two-wheelers or four-wheelers are going to do well with the fact that they've got new products or new cars coming out or new bikes, and the kind of margin pressure, which they've been seeing, is that being alleviated. And obviously with commodity prices coming down, that's another tailwind for the sector. So overall, it's a good sector to be in the short term. I still think the banking sector is the one what you're going to have to make money from if the market's going to go up further from here.
Right, okay. And just stay with us. Lots more to chat about. For now, we're going to take a break. It's an absolutely flat day, but we're clinging on to 19,800 at least for the futures.
Andrew, have you looked at the power financier space closely, REC, PFC and the likes, and the way they've kind of doubled in their book values in the last 6 to 8 months? In fact, one of their peer groups, though not the legacy power, but renewable power financier, IRDDA, IPO, which is getting lined up, is also witnessing good response. Do you like this space?
Yeah, I mean we've been dipping our toes into this space. I must admit in the past month or so, on the basis that I think for some of these companies now they're moving into renewable financing as well, and I think the market likes that part of the story. One of the companies doesn't speak as much as the other in terms of what they're trying to do. But what we're hearing is that some of the problem loans again are going away. So you're getting a stronger balance sheet. The government's obviously this is a huge sector for them, which they want to get right. And the cash flows and the payments to these companies is fine. So I think everyone's going to shifting a little bit away towards this type of kind of financing companies and just away from NBFCs in the short term. So I think there's a lot more to go because I think it's a sector, it's renewables we talked about before in terms of it's something that the government, and not just our government, but globally, is going to be a sector which is going to see a lot of investment. So the likes of RECs and so forth will continue to do well and gain market share.
Okay. Also, Andrew, the IPO market has been quite a flush, right, of late. I mean, since you were talking about IFC, about PFC, REC, you have to talk about IREDA IPO as well, right? Indian Renewable Energy Development Agency. I don't know if you've taken a look, or any of the other IPOs which have been hitting the primary markets of late.
No, we have participated in a number of the IPOs over the past 3 to 4 months, but again, being very selective. I mean, there's 4 coming out next week. I'm not sure we'll be going for all of them, but I think Tata is obviously looking something that's going to be interesting. That will we've met the management; they like the story. So these are kind of companies that we think will do very well. Not just in the very short term, but longer term as well. And then there's a whole bunch of other companies I'm seeing their prospectuses coming out. So I think the next few 2 to 3 weeks is going to be a lot of IPOs. What I have noticed though is that what is interesting is that the premiums are coming down a little bit, even though they're hugely oversubscribed, which I don't think is a bad thing either. We're not just playing for hype, you're playing for the actual fundamental story.
Okay, point taken. In fact, we did speak with the management of IREDA, listen into what they have to say about the sector and the company's prospects.
When we talk about having 500 gigawatt installed capacity, which is roughly require an additional capacity addition of 300 to 320 gigawatt, in addition to 30 gigawatt of thermal, which require for our base load kind of requirement. So fair amount of investment is going to happen in the renewable space. We have a rough projection or estimate of renewable investment in the country till 2030 around 30 lakh crores. And if you go by a rough estimate of debt equity 75 to 25, then around 24 lakhs crores will be required for additional capacity. And out of that 24 lakh crore, typically 50% is expected to be supported by the NBFCs. When I talk about NBFC, the major player would be IREDA and other 2 major arm of Power Ministry, that is REC and PFC.
Okay, point taken. Since we've talked about PSUs and the power financiers, Andrew, a word on the railway stocks. They seem to have gone out of flavor at least in the last few weeks, but today again they're perking up, whether it's a Titagar, whether it's a Realtel, whether it's a Rites, IRFC, etc. All of them are higher, and even Railway Cast Nigam at all. After the run-up and a bit of a pause, do you think it's time again to dip into these names?
I must admit, I'm not an expert on those kind of railway stocks, but the way I've been looking at this this whole kind of industry is through some of the players like the Siemens of this world, because again they have an ABBs. So apart from playing that infrastructure play with those two companies, you also get the railways in there as well. So that's the way we've been looking at it.
There's also, TVS Motors, which is running in trade right now. But Andrew, if you look at TVS Motors' embedded value of assets which are inside, their EV business, which is already clocking numbers close to 2/3 of Ola Electric. Ola Electric, which is heading for IPO 2-3 months, if you read the papers, is being valued at around $5 billion. And the entire company legacy and EV business in TVS Motors, which is a close peer, is way less than that. Do you see value unlocking possibility by the time Ola Electric IPO hits the street at TVS?
It's a great analysis, and yes, I'm sure that's what the market will be looking at if you're valuing something, and that's the whole story around a lot of these companies, right? We're seeing that whether it's globally, valuations are higher, or the expectation is that those valuations could be kind of placed upon some of the kind of subsidiaries or other companies within the group. This is really kind of move prices in the kind of shorter term as well. So yeah, I would have thought everyone's going to look at those valuations and say we should apply the same. And why shouldn't you? Unless there's something different about the way the company's operating their business, which I don't think is the case. So I think you will get, maybe not all of it, but I think you'll get some of it played through in that revaluation of the business that the market's been ignoring, shall we say, until you get a new listing. So it's a good analysis by you.
Right, okay, that's the take coming in on TVS Motors. What an excellent performance. 60.5% no less is the kind of move that you're seeing on the stock all through this year. Kunal, since you also track some of the auto names closely and have been holding some of them as well, where are you confident of adding fresh positions, if at all, at this juncture?
So I think, of course, Tata Motors is something which we've been discussing consistently. That's a stock which I would still believe is good to add at current levels of at least 670, 680, where the stock is trading right now. So it looks attractive. The recent breakout is also indicative of a 4-month, 5-month consolidation breakout from the June-July highs for Tata Motors. You've been discussing Maruti, and specifically from the point where the stock had broken past about the 10,000 levels. That's a classical kind of a breakout indication for Maruti. The stock from the 10,000 mark has not gone into any kind of a major correction. It's not yet broken the 10,000 levels in terms of supports. So which means that the trends have started off on the upside for Maruti, and the 10,000 mark approximately could act as a major support or a base for the stock over the near to medium term. Now, from a fresh breakout point of view, Hero MotoCorp is something which looks attractive. I think after the last 3 days of strong up move, the stock breaking past about 3,300 mark yesterday, I think coming closer to the 3,400 levels today, I think it's indicative of a fresh flat pattern breakout for Hero MotoCorp. So maybe another upside of 200 to 50 points broadly over the next couple of weeks is what we can look out for.
Okay, so that's a take on some of these automobile players as well. Separately, Nykaa, that stock is high around 9%. And Andrew, if you have looked at Nykaa as well, we have seen the kind of turnaround as far as Zomato is concerned. Other names like Paytm, etc. had also kind of made that bottom earlier and moved ahead from there, but Nykaa was languishing. Do you believe it's time now to look at this one as well?
Yeah, I know. I think it is. I think we've seen the kind of strong share price rises of Zomato and Paytm as they move towards that kind of break even or profitability. Paytm might be suffering a little bit today because of what's happened with the RBI. So therefore, the other stock you would look at then, if your expectations of the profitability is going to be there soon, then it's going to be the other kind of company, which is Nykaa. So I think that's what the market's looking at and getting excited about. And it's been, as you kind of, all those three stocks have been doing nothing for a little bit as the market was just waiting confirmation that things are moving on track. And I think once that confirmation was there, we've seen all stocks, all these three stocks move up quite significantly.
Yeah, Andrew, great to have you on the show, and we'll chat again soon. We'll have a World Cup winner as well then. And yeah, here's hoping it's a good match too. But let's take some closing strategies as well. Naresh, what's on your list?
So continue like Dr. Reddy's, the stock has seen good follow-up today from yesterday's momentum. Looks like a stock which would go towards that 6,000 mark. So a buy at current levels as well.
Right. Kunal, what about your trades?
So I'll go with insurance stocks. SBI Life is something which looks attractive at 1400 odd levels. Looks to be a bet for at least another 70 to 80 points on the upside.
Let's take a very quick break. Then on that note, when we come back, we'll track the last half an hour of trade this week. Back with closing trades right here in ET now. We're still holding on absolutely flat. It's a bit of a tug of war. You've got insurance plays, L&T, some of the auto names on one side, but it's the private banking pack which continues to drag. So no improvement, actually not private, the large cap banking space which continues to drag. Looking at Axis Bank right now, that's down 3.25%, SBI down 3.6%, Bajaj Finance is down 2%, ICICI Bank, HDFC Bank. And of course, there are the other blue chips like Reliance as well, which are not doing anything today. Ajay Baga too joins in on the show. Ajay, hi, afternoon. Good to have you on the show. I guess all eyes on Sunday, of course, the World Cup final. But let's talk markets before that. We'll chat about that in just a bit. Ajay, what do you do with, the private banking names and, NBFCs like Bajaj Finance in lieu of the RBI norms now? Do you think this dip is to be bought into, or would you want to wait it out?
I think we can wait out for some time to see, let the impact work through. I am hoping that the impact will be overdone, so it will give a buying opportunity. Very well-run companies and with very strong business models. RBI has increased the risk-weighted asset percentage to kind of mellow down the growth of unsecured lending. So that impacts the business models or the business growth to some extent. We will have a better idea over the weekend once the sell side brokers have met the managements and bring out their projections. Today has been an overreaction, but we can wait out, Aisha. No rush in this kind of a market scenario. We'll wait it for a couple of weeks, let it work through, and you will get an entry opportunity.
Sure, point taken. So that's a take as far as some of these lending norms and implications are concerned. But I want to take a step back, Mr. Baga. You follow the global economics also very closely. The kind of data that we have got from CPI as well as PPI globally, that's got people to believe that next year, perhaps at the start of the year itself, we might be talking about rate cuts and there won't be a rate hike in December as was earlier anticipated. Your own reading of the numbers?
Absolutely. I think no more rate hikes by the Fed. The ECB also has said that they would be on pause. I don't think you will get rate cuts before June. And the biggest issue there is, or rather the tailwind there is that the economies are growing much more than forecast, especially the US economy. So the last quarter projections for the US economy are at about 2.1, 2.2% growth year on year. Much higher than what was anticipated this time last year. The good news is 0 to 5% is done. You're not going much further, even in a worst case scenario, maybe one rate hike more by March in case the oil prices shoot up or the Middle East war expands out. Only then you could see the Fed or the ECB's hands forced. Otherwise, we are very much at the peak of the rates, which is good news. Higher for longer, they are insisting. I think that will last for another 2 quarters. So around June is when we are expecting the first rate cuts from the Fed, and maybe 4 to 5 rate cuts going into December of next year. That is what we are expecting. The Fed's target of 2% will not be met till about 2025, unless there's a very strong economic contraction. That is not the consensus right now. Consensus is for a softish economy, not near any contraction or recession kind of numbers, but softening global economy and fragmentation with Europe slowing, Japan slow, China trying to ratchet up but slower than this year, and US continuing to grow well. India providing a good boost to the global growth with a 6% plus print in terms of real GDP.
Sure. So what does this do to our own market? Are you expecting those life high levels to be hit soon, given all of these headwinds which are there at the macro level seem to be now abating?
I think that we'll get this market to top out by February or February end, as soon as the last budget is done with and elections are announced. We'll probably peak nearer to that. Then 2-3 months of volatility as the new government gets formed, and during that time investors will be skittish and new money will wait out those 2-3 months. And then come June, we should resume. So that's a linear view. Of course, markets will be much more lumpy, much more cyclical than that. But I think seasonality is working for us. Good macros are working for us. And probably next 3 months, these markets will try to make up for what they have missed out over the last 2 years and give us pretty good returns, and then become flattish to sideways to maybe mildly downtrending till the election results come in and the new government gets formed, and then resume their journey upwards.
Right. Okay. Stay with us, Ajay. Lots more to talk about, but I'm going to quickly take it across to Sharad as well and get in a check on what the dealing room chatter is right now.
Well, yes, in focus we are having SRIRAM Properties, and what we are hearing from the dealers is that a block deal is expected to happen for the stock. Now, a large PE player is set to be offloading this stake, and importantly, for the last 2 to 3 odd trading sessions, the volumes have also picked up for the stock. Recently, the Q2 numbers also came and they were very strong, and we did look at the realizations also. And in the first half, the realizations also spiked up by almost 14% on a year-on-year basis. Going ahead, the guidance, 2 important things to watch out for the stock. The first one is it is on track to hand over roughly 3,000 odd units for FY24. And when it comes to the launches, they're expecting almost 3 to 5 launches in the second half of fiscal year. Lastly, they have also stated that the targeted completion would be there of 5 key projects in this H2 FY24 as well. Apart from this, the institutional interest is also being seen in the stock as well.
Right, okay, that's the talk coming in right now in SRIRAM Properties. And Ajay, that's been the one buoyant space, right? Real estate as well as the entire home building theme. And, you know, just about everyone is now trying to figure out where are the new opportunities or ideas within that pack. The one space which has also done very well in lieu of all the construction, infrastructure, development as well, has been wiring and cable. Wondering whether there are opportunities to add positions here, Ajay, or anything that you like within this theme.
Overall, how we have to see in a macro way, we are probably in the 2.5 to 3rd year of the real estate recovery cycle and the boom cycle. So this goes on normally 7 to 10 years is a real estate cycle. They are pretty long cycles, unlike the stock market cycle. And what we are seeing is growing ability of people to fund their housing loans. The housing companies are able to give long-term loans which reduce the EMIs and increase the affordability, and the market pricing having been correct. What has happened now is that most of the inventory has got wiped out. So a lot more of construction will need to come in, and supply will probably be ahead of demand, which is good news for the listed real estate players. We expect them to continue to do better. The building material players are again on a good cycle. They are riding off this real estate boom. The construction and infrastructure companies, with the 10 lakh odd crores of central government funding, state government funding, and private capex still very nascent. That will come through, on a 11 lakh crore profit pool of private sector companies. We used to see 7 lakh odd crores going back into capex or renewal of their assets. That has come down to 4 lakhs. I think post the elections and once the new government finds its bearings, you could see some of the sectors starting to invest in private capex, and that will add a lot of traction. So industrials, construction, real estate, building materials, all looking good. Cement should do well. Again, cement, the overhang always remains of new capacity additions and how does the demand catch up to supply. But we are seeing a lot of demand coming through. And again, 6 months down the line, we expect a lot more announcements, and that should keep the cement players also bid up. So cement also looking good on a one-year basis.
Point taken. Just reading out the release which Poonawalla FinCorp has actually sent to the exchanges, and they're talking about the impact this latest RBI circular will have on their business. They're saying that they're of course AAA rated, so the debt equity ratio is also quite strong for them at 1.4x. It's one of the lowest in the NBFC sector, and basis the initial calculations, they say that a company's consumer credit exposure shall be marginal and is expected to be around 220 basis points. And as a result of that, the capital adequacy will become 40%, still significantly higher than the regulatory requirement of 15%. So there's enough headroom, to be honest, from 15% all the way to 40%. So that's the reason that stock too has actually managed to recover from the day's low. But quickly coming to you, Nuresh, a couple of these counters which are buzzing in the trading session. Want your view on Nykaa and Narayana Healthcare?
So Nykaa has finally given a breakout after consolidating for the last almost 1 year, very similar to what happened with a lot of new age companies almost 6 months back. So out here, the stock corrected from 400 all the way to down to 100, 120 levels. And now for the last 1 year, there were multiple tops around this 150, 160 mark. So this possibly indicates a start of a new trend wherein it becomes a buy on all dips with a stop loss below 150 and upside could go towards 200, 220. So out here looks like a trend change. On Narayana Rodale, the stock has been a slow and steady trend all through the last 2 years. Today's move looks a little more overdone for the near term. Would expect some bit of a consolidation here, time to book some profits.
Profits, at least that's the take coming in on Narayana Hridale. We had a very interesting chat earlier today with the Deepam Secretary as well. Given all the talk around disinvestment, etc., let's hear out what he told my colleague.
There is always a target, but the point is that whatever target is fixed 14 months ago, right, in February, that undergoes a change as we say what are the market conditions, and also as we have the transactions fructifying.
Okay, if you talk about the specifics, a few of the transactions which were ongoing were, of course, IDBI Bank, which was on the agenda for past 1.5 years or so. What is the progress there, if you can specify?
The IDBI Bank transaction is on course, and since it's a banking transaction, it really involves RBI as well. So I think you have a fit and proper issue of RBI, and then we have a due diligence. So it's going on in that direction.
So last question I would ask about what are the other transactions you are looking. You mentioned about the IPO. What are the other transactions you feel that this year will be fructified? And also IDBI Bank, is it happening this year or it will be in next financial year?
No, I mean the transactions, if you are meaning only the strategic disinvestment transactions, because transactions keep happening.
Right.
Now there is a transaction, for example, on IREDA IPO, right, which is going to take us this month.
No, that is happening. Sir, I asked about IDBI Bank. Is it happening this year? Is it a possibility?
Well, we can't say that because that's it's really, conditioned on several factors, which, as I said, that, this was a fit and proper examination by the RBI, which is presently the case. And then there is a due diligence and then financial bidding. So I think it depends upon, how much time all these things. It's a big thing, first time bank transaction happening.
And what happens to the other private banks, sir? We have been hearing for long. The private banks, there are two things. One, there are many public sector banks where you have to necessarily reduce your stake. And sir, other thing you were talking about privatization, out of 12 banks, there was an idea that in future there should be 4 or 5 public sector banks. So on both the things, what is the thinking of the government?
No, we are only talking of IDBI Bank at the moment because that's one which is cleared by the cabinet.
Okay, so that's the latest coming in from the Pharma Secretary. But in the meantime, Pharma Sector is one space which is actually holding up okay despite the weakness that we are seeing in the rest of the market. And the last couple of weeks, there has been a fresh buying that we have seen from DIIs and institutions alike. Mr. Baga, what's your sense on the Pharma Sector, and is there any specific name that looks positively placed?
Name I won't be able to give, but pharma sector, there are a lot of attractive opportunities now coming through. Firstly, the US generics market, the revenue fall has plateaued off, and we are seeing some amount of gains now coming in year on year. So opportunities are there. And then quite a few of the Indian owned pharma companies that we like. Hospitals have done very well. I think those should continue to do well. Lot of opportunities there for further growth, for greenfield projects to come in. So pharma in this kind of a scenario that we are envisaging over the next 1 year should do well. It remains a defensive sector overall. But given that it has been an underperformer, under-owned sector for a number of years, we see that short time turnaround coming through to pharma, and some selective pharma are looking quite interesting and should do well. Hospitals as a sector is looking quite interesting and should continue to do well.
Ajay, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out and speaking with us today.
Thank you.
Okay, since we're on the subject of pharma, we exclusively caught up with Arunish Chawla as well, the Pharma Secretary, where he says that India is unlikely, or rather likely, to become a $200 billion industry by 2030 and also a major exporter by the same year.
By working together with industry, academia, and the support that government is giving for both production-linked incentives, for strengthening the industry schemes, for common facilities, and for the research and development. We hope to become a 200 billion by 2030. That is 3 to 4 times the present size. We are already exporting in most sectors.
Sir, which kind of policy support can we expect for the industry going forward in terms of further growth in R&D sector, as you mentioned earlier? So do you think that the industry needs to step up its investment, and the policy support that the government will also provide going forward?
We have started a new scheme called the PRIP scheme, and we are working on the detailed guidelines in consultation with the industry and the academia. Through this scheme, we'll be able to pool together both public and private resources. As you know, the medical technology industry is resource intensive, and nowhere in the world can either government sector or the private sector by itself put in sponsor or fund research of this magnitude.
Okay, that's the word coming in from the Pharma Secretary. In fact, Naresh, some of these pharma names have done well of late. Ajay Baga was just talking about as to how he's more bullish on healthcare. So Apollo Hospitals and the likes is perhaps more of interest. Analyze the entire pharma and healthcare space and tell us what are the charts which are looking good.
we had a strong rally in a lot of names like Aurobindo, Lupin, etc. But now we are looking at a breakout and momentum shifting towards the large pharma names. So something like a Sun Pharma is coming back to 8-year highs. Dr. Reddy's has given a short-term breakout, wherein this could go towards an all-time high. So two names which are large and interesting look very, very promising in the pharma pack. Decent enough weights on the Nifty Pharma index. So my top two picks would be Dr. Reddy's and Sun Pharma. On the downside, we are seeing turnaround in a lot of names which were sideways for a long period of time or corrected sharply. Something like a Wockhardt Pharma has started doing well. We are even seeing some spikes in something like a Strides, etc. So overall, pharma looks interesting. The older names which did really well over the last 6-8 months could take a pause, but names like larger names, Dr. Reddy, Sun Pharma could continue in this trend.
Taken, so those are some of the pharma names. But I'm not sure, Kunal, have you done any analysis on the cricket match, and is there any other number crunching that we can do there to try and get the probability of India winning? It's been, what, 10 matches on the trot that we have been winning. I think this will be the 11th one if we do finally clinch that particular trophy. Anything, Kunal, that you have analyzed on the charts, anything at all?
There are no charts available, but I am pretty much certain that I think it's 100% probability that India is winning.
Okay, so that becomes a certainty then, no longer a probability. There's a 100% expectation that India is likely to win. I'm guessing it's the same for you, Naresh, or you're being a bit more cautious about it and realistic and maybe making it, let's say, 95-5?
Always positive and always expect 100%.
Good
Anisha,
to know.
what about you?
Bleeding blue, right here. Bleeding blue, 100% going for India. So I hope that's the case, because it's all about the match now, and it's no longer about the points table or what you have done in the last few matches. Only that day matters. So I think it'll all depend on what we do that day. So fingers crossed for it. 2003 wasn't a very pretty scene. None of us want to remember that. So it's time we undo those bad images and bad memories that we have and go ahead and win the title. So so World Cup 1 was 1983 and 2011, of course. The finals that we have made it is 2003 and 2023, and hopefully 2023 will get shifted from the right column to the left column very soon.
Hopefully. Fingers crossed on that one as well. Okay, Sunday it is, and we really can't wait for that. I wonder if we win, how are we going to make it to work on Monday morning?
I don't want to think about that.
Just the way we did after the semi-finals. But yeah. Let's just see what else is holding out well in the market. You know, you've got Unilever, which is looking okay. Asian Paints, of course, is gaining ground. Some of these crude beneficiaries have done very well of late. In fact, I want to see what the entire OMC pack as well is up to, because they are the ones which actually would stand to benefit. So you're not really seeing that trade continue, but since the crude crack, these stocks have been holding out and have been giving some decent returns. Today, of course, you're not seeing them make much of a move. In fact, they're at the lowest point in the session right now. We're not even actually closing all that well. We're closing pretty much around, I mean, not to say that the range today from the high to the low has been anything meaningful. It's been a very, very narrow band. Don't go by those jagged edges. It's been pretty flat at days for the better part of today's trading session. We're closing pretty sedate. 19,719 is where we're going home for the day. Kunal, on the Nifty Bank, the fact that the Nifty Bank is closing it at the session lows, flat for the Nifty, what's that telling you for Monday?
I think I'll look at it this way, Aisha, that even after a 600-point drop on the Bank Nifty, the Nifty is still flat at 19,750 odd mark on the spot levels. The premium for both the indices is still pretty much on the stronger side. So I would probably look at it this way, that on the back of the news flow which had happened yesterday, the markets are pricing some sharp correction across many of the banking names. This could also probably indicate that we may over the next couple of days try and look out for a near-term bottom for the banking index. But I think more importantly, once this the sector composition gets realigned, what we also have to look out for is themes which could be devoid of the banking names, which could lead the charge from the front. For example, today we saw the insurance stocks moving up hard. That could be a strong theme over the next maybe few weeks. You may also look out for metal stocks making a strong comeback, bullish on the likes of Tata Steel, etc., which have made a very strong comeback for themselves. So I think that would be one thing which the markets will be looking out for. And of course, the few odd sectors which have managed to outperform: the pharma, the healthcare space, as well as the FMCG stocks. So I think it's all about now trying to find the balance, devoid of the banking index, which I believe could remain into a drag over the next couple of days.
Now, Naresh, on that note, we'll let you go, and here's wishing from all of us that Team India does win. Having said that, we are closing the trading session just around the flat line, as we pointed out, a cut of almost 0.25%. So we have given up almost 100 points from the day's high. 19,710 is where we are ending the day. The advance decline ratio is marginally favoring the advances, and that's because the market breadth actually has been better. And we are closing very close to those record high levels. And despite the weakness that we have seen today, for the week we have managed to hold up around 1.5%. So it's not been an entirely bad week, especially because it was truncated as well. For the day, of course, Bank Nifty, that's down 650 points. IDFC First Bank, SBI, Axis Bank, Bandhan Bank, these were your big drags, and all the consequence of Bank Nifty go home in the red today. In terms of the broader markets, let's talk about some of the volume buzzers. Nykaa was higher, Titagarh Wagons, BSE has managed to perk up, and then the entire insurance space, SBI Life, ICICI Lombard, ICICI Pru, all of these stocks were inching higher, and then some of the railway stocks too. And IT too managed to buck the trend. FMCG, Auto and Pharma, these continue to be the flavor of the day. But with that, we are wrapping up this edition of Closing Trades. Thanks so much for being with us.